Hello. Happy already Wednesday, first day of summer, June 21st. Good morning, Patrick. Oh, it's a very quiet morning in here. A bunch of people in the background, not much going on in the chat. Hopefully, it's working. I had trouble getting the live stream started today. So, if somebody, oh, there we go, Jake K. Good morning. All right, we got Jay Powell. Already his prepared remarks were released. One of the key things is still stressing nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by year end, reducing inflation likely to require a period of below trend growth and some softening of labor market conditions. So that still is being reinforced. Beyond Powell, we got Cook's testimony, Jefferson's testimony, and then we got Goolsby speaking and Mester speaking. So there's not a lot. We had the mortgage information out earlier today. You got some bond auctions and stuff, but it's pretty much filled with Fed speak today. Good morning, Jacob. Good morning, Anissa. So that's going to be dominating. I'll go through really what I'm watching, but it's that key 4,400 area on the S&P. Mega caps pulling back, except Tesla's still on its mad tear higher. That's really about it. Sort of quiet this morning. Financials, let me refresh this. Consumer defensive is actually the only thing up, so it looks like there might be a somewhat defensive positioning today. Comm services and technology pulling back. The Fed watch tool. We'll do one more refresh. I didn't do it in the last few minutes. So we're at 77% roughly for the hike, but the probability curve shows one hike still holding through the end of the year, then only one cut in January, and then another cut in March. So that's where that sits, and those are next year. But market really still buying in alignment, at least at this point, with what Jay Powell is saying. Fear and greed, we're still in extreme greed, even with this little couple day pullback, has not even made a dent in it. Current market valuation, these were finally updated, still in overvalued, one standard deviation over from the trend. A lot of the individual models are all in overvalued territory. PE ratio still about 25.4. The key area also 4,400 in terms of put and call positioning. Gamma flip is around 4,408. I'm just roughly looking at 4,400. So if we start breaking 4,400, we get a lot more put gamma really kicking in, some call gamma dissipating, and we could see, you can see the slope of the negative gamma. We could dip pretty quickly into this range, especially on an acceleration towards 4,300. Because then you got dealers selling into the decline pretty rapidly. So that's why this 4,400 is very key, especially if we do break it with momentum. Is anything on the radar screen that would break it? No. But if we start, also remember a lot of this, you got the dailies, the daily options, they're over 50% now. And just as they've juiced stuff to the upside, if we start getting spikes in implied volatility, they can really unravel stuff quickly to the downside. Yesterday we had FedEx, which missed on revenue. Remember, watch, especially the next earnings systems, next earnings season, watch for misses on revenue. You can game EPS a lot. You can't game revenue. So FedEx did miss on revenue, and it was a slight gap down. Today went a big go this morning. KB home after. The only other thing I'm really interested in this week is CarMax at the end of the week. All right. Thanks, Chris. Again, it's not going to be every day. There'll be days I miss, but I'm trying to relay the key information. I just wanted to get that out there. The 4,400s is very key. Pep thinks gold's going to test. We'll take a look at gold. Good morning, Options 22, Grand Rising, Christoph. Okay. We'll see if we can get to snow. So You see here, actually the true gamma fib's 4408. That's right around yesterday's lows, 4410. The daily rotation zone's right in that area. So that's going to be the little warning sign. If we start breaking below 4410, 4408 to 4410, then you accelerate below 4,000. Still, I have the retracement harmonics up here. We have a couple key areas. This 4380, and then major is about 4332, and then for the full gap fill, remember this takes us squarely into negative gamma territory, would be to 4300. Also remember, the weekly rotation zone is back at 4300 roughly in that area, and weekly cycles are starting to roll over. Does that mean every day has to be down? No, but I'm really focusing, again, 4,400. Early in the day, I'm watching 4310. Now, to the upside, we really have to start getting there some pretty key resistance around 4440 to 4445. So unless there's a reversal pattern that forms intraday, that's the key area that we need to see some strength above. And the same thing as yesterday. From the highs back on Friday, if we make a new low beyond the low formed yesterday, I will drag the retracement harmonics down. But above this 44, you see we have this harmonic cluster at 4440. 4452 is the first target, and then 4462. Again, new low. If we form a new intraday low, make sure you adjust those targets. But that's exactly what I'm doing. And I'm still, overall, from a bigger perspective, watching for a reconnection with the weekly rotation zone. We've come to the upper end of the channel, and we can easily, it doesn't even make a major technical dent yet. It will cause some people some panic, but that's back to the breakout area from last August. So that would be back to key support, and then we'd reassess what it's looking like. So don't get complacent. This is a great area, depending on your time frame, to trail some stops. Again, once we get some kind of little intermediate bottom, this next secondary bounce is going to tell us a lot about the underlying strength, whether just everything just rushes in and we take out Friday's highs, or if we struggle as we approach them. For the NASDAQ, we're looking at about 15,100. That's the key level. Below that, then 14 or 15,000, 14,950 to 15,000, and then the major breakout area 14,700. On a more substantial unraveling, the 14,700 is going to be a key target area for me. The Dow, again, finally, the Dow showing a little weakness. And yes, if we do get a bounce over the next couple days, we could be forming a head and shoulders top. Head, left shoulder, we still need a bounce to get our right shoulder in. But that's what I'm watching for from the bigger macro perspective. The key, very key support is about 34,100. We start breaking below there. I'm watching for the gap fill. All right. Russell confirmed, but has not traded. Remember, I was watching for a close below 1876. No close below that yet. I will be watching for that 4-hour close. There's not even a 1-hour close below that. And then that would trigger a potentially bigger pullback in the Russell. That's the only key thing with some kind of decent probability potential topping pattern. It is confirmed, but not triggered. Just want to show something else. The cues to the Russell. Remember, we had the initial sell-off. This is what I talk about, secondary reaction. Secondary reaction taking place over the last week. Now we formed on the ratio, cues to IWM, we formed the potential double top. If the ratio closes on a daily basis below 186, that's going to be, now this, we could have a much more substantial sell-off. You could get sell-offs in both the Russell and the Qs or the NASDAQ, but the NASDAQ could sell off a lot more to bring the ratio back between the 50 to 62.5. So I'm going to be keeping an eye on this. We're still a long way out from triggering, but this is something I'm going to be checking in with regularly for my own knowledge, because that could be an interesting shift, especially with the Qs being so, or NASDAQ being so overvalued. All right, VIX is still, I mean, now we're in triple bottom, so no more double bottom. No more double bottom, but I'm still going to be watching if we do close on a daily basis above 15. The DAX key area for me is a 16,100 on a continued pullback. And then I'll be watching for the bounce play in the DAX. The notes aren't doing anything. I'm pretty much ignoring them until they get out of at least the minor range. The minor range is on a breakout above 113.18 or a break below 112.20. You see the 10-2s back yesterday was pretty much closed at the 87.5, so back in the key bottoming area. Now this is interesting because this has met the criteria for, on a monthly basis, a potential double bottom. So the highs from back in March from the financial banking crisis, the mini banking crisis, if we start getting a close, especially a monthly close back above those highs, that would be triggering the double bottom. And that would be the unraveling. That would be the unraveling. I think we can still go lower in this area, but it's going to take a lot to take this double bottom off the table. So do keep that in mind also. Another thing to check in on a longer term basis. Dollar index, we're bouncing back to the rotation zone. So I'm going to be watching for the rollover play in that, and then see how it holds up against these recent lows from last Friday. Crude, nothing going on. I'm watching with the so far inside day yesterday. I'm watching yesterday's outside day to Friday. So I'm watching the key highs and lows, but other than that, not much going on. PEP, watching, remember we're now in triple bottom. We break below this 1936 area. My first target is 1916 to 1919. We have a whole bunch of clustering right there. I'll close below 1913. Then the target goes to, this is where we would be in agreement. My next target would be, there's still a gap left behind, back from March, and you got the 200 on the daily. And then I'd be watching for a more significant, a major potential bottoming formation. Yen, still 142.63 is still key. And from a retracement point of view, we're closing in right at the major 62.5. So I'm watching that, this 142, 70, 142.70 on a closing basis. Euro, still not technically this would be a lower probability double top, because this is a pretty key reversal move. If you look on the bigger time frame, this hitch makes it lower probability, but I still will watch if we start closing black below 106.28. Nothing going to Bitcoin, finally bouncing out yesterday. Going back, I'm watching for the retest of the high area now, and the double after hitting the first target is, if it closes above today, 28,760, the double is done. Oh, sorry, 28,687, so 28,700. The double is done. There's been a lot of interesting printing going on. I'll leave it at that with that. with Bitcoin. Spiders. Key rally area, we're trading just above yesterday's lows. So the close 437.18, and then you have a prior close if we do get the bigger bounce 439.16. Other than that, yesterday's lows at 435 are very key. We start breaking below that 433.75, and then roughly back down to 430. The Qs, key is 363.50, where that would be key on any pullback. That's what I'm watching today. Short term 366.90 for the potential gap fill play. And then I'll look at yesterday's highs, 368.32. Then I would use, if we don't make a new low today, same thing as I went over before, the harmonics 369.49 and 370.61. Besides seeing how those conform with some price action. But if we do pull back, especially to retest this low area, watch for a potential mini double bottom. Tesla still chugging along. Again, the potential double that never confirmed or triggered is now clearly off the table. The next key area, 288 to 290. That's where that sits. NVIDIA, little pullback, so with the market pullback. Key support in NVIDIA still is 420. We're trading really above that, but that's what I'll be watching for key support. If that starts breaking, I'll watch for a backfill into the daily rotation zone. Other than that, still 458 is the next major target from a trailing perspective. You wanted snow. Snowflake is really, I mean, your key support sitting at this, where it's trading pre-market, with this 181, 180. If it breaks below that, the key to really watch for a breakdown play is about 170. Other than that, there's not a great bunch of great patterns unless you're looking at it very short term. Yeah, I talked about that. FedEx did miss on revenue. You have stuff slowing down. You have a lot of stuff starting to slow down, but the market is just trading the way the market's going to trade. We'll take a look at FedEx real quick. On the weekly basis, this is a very flat double. It's going to be a much lower probability, but the key thing, if you look here on FedEx, this is your major support, which is roughly, if you're trying to say this is double, it's too extended on the left-hand side to really fit with the double targets. But what would I'd be watching this very key low area, because that's also with the weekly 200. So if that breaks on FedEx, the targets that I would utilize would be 190. Look, and that's at the low from the rally in March. And then 178. Those would be the two targets I would be utilizing if we break below the 200. You see, and that sort of 50 week is also. So that's going to be the major support area. You also see on the daily resistance, and you have the gap left behind too from that March area. But that's going to be your key. Prior resistance becoming support tested twice. So if that breaks, uh-oh. I already did, Cold Pep. Everyone have a fantastic trading day, and I shall talk to you later. Just remember, there's lots of Fed speak and testimony going on today, so I don't know what they would say that would really shock the markets. Maybe nothing, but just pay attention if something comes, if there's a zinger that comes out of nowhere. The market, though, is pricing in that this was a skip and that there's going to be at least one more hike. So that's... And the prepared marks didn't cause any real, when they were released, didn't cause any real ripples in the market. So 4,400 on the S&P is key. Bye. Bye for now.